Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, SpaceX gears up to finalize its IPO pricing today. Attracts more than $70 billion in orders from retail investors alone.
Plus, Oracle is under pressure after the company reported higher quarterly capex than expected, raising concerns about the returns on AI.
And 776 founder and Reddit co-founder Alexis Ohanian joins us live from SuperReturn in Berlin later this hour.
First, Ed, with us both here in New York, we check in on these markets that we see the bounce back continue to an extent. Nasdaq 100 up 0.3%. We're coming down from earlier highs, but still there seems to be a lot of muscle memory back in the memory perspective. We've got semiconductors up 2.4%. If you're looking at that SOX index, we are buying back into the hardware, but it's not all pretty out there if you're looking at certain names amid the geopolitical angst as well.
Okay, so the big earnings story is Oracle, right? It's down 12% basically, falls the most in 6 months, and everyone is still worried about how much it costs to get data centers built. And it's so funny because like out there in the market, in the AI trade, the same anxiety exists on the other side of the table. Like, you can't get it built fast enough. You know, give us the compute. We're so compute constrained, but we're going to dig into that a lot more later in the hour. There's still only one story in town.
There is, and it's why you're in town.
Literally.
It's why we all gather together in town, because we've got the big story of the day, of the week, of months. SpaceX's IPO is upon us. Almost, it feels like we've been building to this crescendo moment for a very long time. Bloomberg's IPO reporter Bailey Lipschultz joins us around the desks. Space reporters in town, Loren, Grush. And look, you've been along this ride with us for many a month. Loren, what does this mean when we're just galvanizing the amount of demand, when we're starting to see that retail investments are so extreme and order books are filling up? But this is a space story. What does it mean for your industry?
Well, it has become something more than a space story. You know, if I had my bets on how SpaceX would IPO, I do not think I would have had it IPO in this kind of current form, right? We were told they would never IPO until they had achieved Elon's dream of going to Mars. Now it's this hybrid rocket, telecom, AI company. But I just think it speaks to the value that SpaceX has provided up until now as a launch provider, as this telecom satellite operator. You know, it's hard to really understate the value that this company has brought to our space program and now also to, you know, the telecom business as well. So it's hard to quantify, but I think you're seeing it with these, you know, astronomical numbers, if you are. Sorry.
You know, a lot
all
of
the puns. Right?
No, you know, this is out of this world, right? This is also unusual. Like, Bailey, you and I have been sort of banging our heads on our desks because there's a process to it. It's an atypical process that's playing out, but catch the audience up on the mechanics, I guess. What happens likely after market close today, what happens tomorrow, and where we think the numbers stand, and then we can get to the kind of more intergalactic theme that we want to.
We just got to look back a week ago. They came out with a fixed price. Abnormal thing here in the U.S.
That doesn't normally happen.
No, normally you come out with a range. You want to walk Wall Street up to it. You want to start low, then come upsize, raise the number of shares, raise the price, bake in a big pop. Elon and company over at SpaceX said, we're going to treat this like a private deal. This is the price. This is the size. Are you in or are you out? So that's been playing out for the last week. The bankers closed the formal order books yesterday at around 4 o'clock. They're all meeting today, deciding who's going to get what. They're eventually going to take that to Brett Johnson and Elon Musk and say, this is what we're thinking. Allocations are expected to go out this evening, early tomorrow morning. People are going to find out either they got zero or maybe they got billions of dollars worth of shares. And then tomorrow, the fun will start to take place when we start seeing where shares are indicated, probably in the 10 o'clock hour. Expectations are we'll get first trade sometime later in the afternoon. And we'll see if the plumbing holds up, because we, again, have never seen a deal of this size. We've never seen a deal of this size with retail being what it is, with Robinhood and others.
And Bailey, you've been front and center, along with Ed, of breaking like the detail on how much demand there is and what allocations thus far we're anticipating. So it's going to be slightly less to an international perspective. Japan's still getting a couple of billion or more. But talk to us about how much retail demand there is, how much they might be allocated, how much demand there is coming from the Middle East and from US investors.
So we've put out, just starting with retail, we put out and broke this morning more than $70 billion in demand. probably well more than $70 billion in demand.
Yeah,
so you think about that, you're talking at least 3 times oversubscribed from retail, which means they have that cash in the bank and are able to buy.
They could have done this
shares.
IPO just on retail.
Which is crazy. If you told people a year ago that SpaceX was going to, Loren, please disagree with me. Loren, SpaceX was
less than a year,
Yeah.
than a year that this all kind of came together.
This
I feel
has
like.
come together quickly. We've seen, and Bloomberg has reported about the demand from the Middle East. We've seen and reported on potential anchor demand. And when you kind of stitch all that together, the 4 times oversubscribed number kind of seems like a no-brainer, especially because people on the buy side inflate their numbers because maybe you put in for $500 million, but you really want to get 10 million. At least you're getting shares.
Right.
But it's something that we haven't seen before.
We're going to get to this in a moment with our guest, but you and I also reported with the team that pre-float, they also got basically investment grade ratings from the credit agencies, which I think is a big indication that this company will raise money post-thing. But I want to go to Loren, because can we just all remember there is a story here that's not about money. It's about a launch system and spacecraft called Starship and data centers in space. Would you kindly, Loren, just summarize the plan here for SpaceX?
Right. It almost represents an entirely new direction for the company. This idea that they're going to put up to 1 million data center satellites into space to do complex computing for AI. I mean, as we mentioned, this wasn't even on our radar in terms of what SpaceX is going to be doing, more than a year ago. And now it seems to be the new direction, the future of the company. And yes, all of this relies on Starship. Starship is that gargantuan rocket that they're building in South Texas. It is meant to fulfill Elon Musk's AI or a Mars dream, but now it's also critical for the AI dream too, because it's going to be needed to launch these AI data center satellites at scale. And as we've noted, the development road has been a tad rocky for Starship. Not saying they can't get there, but it's still unclear when they will unlock full reusability.
Bloomberg's Bailey Lipschultz and Loren Grush. Just incredible reporting to date, and obviously the next 24 hours are going to be a lot. Thank you very much indeed. Much of SpaceX's growth forecast actually hinges on ideas that seem straight out of science fiction, but backers of Elon Musk says he's pulled off the unbelievable before. Brett Winton is the chief futurist at ARK Invest, probably one of the most prominent institutional supporters of Musk's firm. Brett, it's great to have you back on the show, and actually as a place to start, I wanted you just to kindly remind us of how ARK invested in SpaceX, the sort of venture mechanism that you have, and then we'll go into the thesis.
Yeah, so SpaceX AI is the largest position in our venture fund, which is an interval fund that anybody, not just the rich, can invest in, and we did that because, as you can see from the retail demand for the IPO, people understand kind of like the potential power of these innovation-focused companies, and we think that everyday people should be able to get access to these AI exposures, including OpenAI, Anthropic, SpaceX, which are the top positions in the fund. And so we've invested in SpaceX, as long as the vehicle's been available. And from the inception of ARK, we had reusable rockets as a breakthrough disruptive technology. And so I've done work all along the way demonstrating how being able to reduce cost of launch from $10,000 to $1,000 to, we think, much less than $100 with Starship actually unlocks huge market potential, certainly on the Starlink side and kind of as a second stage on the AI side.
Okay, and for AI, one needs data centers. We need, therefore, maybe data centers in space. This is the entire pitch that we now go through. Your workings, your numbers, your thesis on orbital data centers, Brett.
Yeah, well, what's interesting about the SpaceX IPO is you actually don't need the AI business to really work that well in order to actually get a great return on kind of just the Starlink business. So, Elon and co, they are saying they're going to be able to launch tens of gigawatts per year by the late 2020s. So an easy way to think of a gigawatt, you can rent it out at the current market rate. Over the long term, it's something like $15 billion per gigawatt. So imagine launching tens of gigawatts times $15 billion, so $300 billion in incremental revenue in any individual year that you're doing that. The reality of their AI business today is on a blended average basis, they have just rented capacity to Google and Anthropic for just a little under $40 billion per gigawatt. So actually serving it as an infrastructure as a service provider could be a wildly lucrative business for them, because they can build assets on the ground so efficiently, and once they launch into space, they can build it efficiently.
You know, Brett, like you are as a firm regarded as some of the most bullish on Elon Musk, like the individual and the plan that they outlined in the prospectus. But there, of course, are risks. Right? You know, Musk posted on X last night this idea that 1 million tons to orbit will be possible in roughly 5 years. Starship on paper can do 150 metric tons on paper, right? You do the math. That's 1,333 launches a year, every year for 5 years to do that. You know, you would concede, right, that it's a long shot.
Well, he always lays out super ambitious targets for his companies, because that's the way he's found to make his workforce most effective at actually delivering world-changing technologies. Think about it this way. Just look at the Starlink business and imagine look at SpaceX, imagine instead of launching Falcon 9 rockets, I'm launching Starship rockets at the same cadence filled with Starlink satellites. That alone would get me, in 2 years of launching, to roughly a little under $200 billion in revenue. So you don't have to make an assumption that the company is going to be launching, you know, at even 1,000 launches a year in order to get into the kind of mostly on Starlink $300 to $400 billion in revenue by 2030. So there's this discourse out there that, hey, you know, this company on a price to sales basis on the immediate term looks very expensive, and poor retail is investing in this thing because they don't understand. The whole point of capital markets is you raise capital and then you deploy it in high return on invested capital businesses. And Starlink alone it's you know, a 6-month cash on cash return for 5-year linked satellites. They're going to spend $500 million building or launching a rocket filled with satellites and acquiring the customers, and it should generate them $1 billion plus per year over the 5-year life of the satellite. So that's a great business.
So Brett, I mean, unarguable, if you think about how much you've returned, 25,000% has been returned since Tesla went public. But what is also unarguable is, as it stands, SpaceX net loss $4.28 billion on revenue of $4.69 billion in the first quarter. When does it become positive? Does it need to become positive? Are you happy it being loss-making for the foreseeable, because the revenues are just going to go so astronomically high?
No, I think that profitability, at least as we have it modeled, happens very quickly as they launch the Starlink satellites. It really depends upon how much capital they are throwing at terrestrial data centers to try to catch up with the frontier labs in terms of Grok's capability. You can build an amazing business just basically renting compute to others and running Starlink, but there's clearly both an ambition and then a higher margin in actually kind of like competing with Anthropic and OpenAI. In our view, that probably doesn't happen until SpaceX is launching, Brett, multiple gigawatts into orbit.
I'm sorry to interrupt you. There is a disconnect, and that many people share this thesis, right? The TAM number in the prospectus, 26.5 trillion, was for enterprise AI, and I appreciate there's sub-buckets. In the here and now, they've basically played a blinder with a ready-to-go neocloud business. And lots of people keep telling me, like, in the end, it doesn't matter if Grok works or is competitive against Anthropic and OpenAI. They just rent out the capacity, and that will fund the out-of-this-world ambition. What would you respond to that?
I think that's possible. As in the way in which we model the business, that is the more likely outcome. I think to compete, to get to the frontier by 2030, you'll need between 30 and 50 gigawatt years of compute and training. Because xAI started later and they're trying to build their own infrastructure, it's very difficult for them to catch up on that amount of kind of R&D compute thrown at their model. With the caveat that assuming that they merge with Tesla over the next couple of years, cash flow from Tesla could actually fund catch up for them.
You assume that?
I think it's a reasonable assumption, or more likely than not, after the company lists and its shares are all floating, that there is a merger between the entities. It makes a ton of strategic sense. And as we model Tesla, like the cash flow flowing off Robotaxi, they can't effectively deploy it. So, I'm not going to want a special dividend out to shareholders for Tesla. I want them to continue to reinvest in growth. Optimus, the robot business, requires... Yeah. It's not capital constrained, it's really like capability constrained. And so whereas SpaceX actually can use additional capital to continue to accelerate growth.
Brett Winton, we could talk for hours. Chief Futurist at ARK Invest, we are very thankful for the time that you've given us. Now coming up, Oracle makes a costly bet on AI, and their massive spending plans are grabbing Wall Street's attention. It doesn't look pretty. This is Bloomberg Tech. Oracle shares having their worst day in 6 months. That's $61 billion wiped out in market cap after they reported quarterly capital expenditure, which is above what the market thought, raising investor concerns about the profitability of AI infrastructure build-outs. Bloomberg's Brody breaks it down. Look, they sort of tried to tell us that they weren't going to raise more debt equity this fiscal year, but we're looking now at next year, and there is going to be a lot more raising needed to do.
Right. The whole question for Oracle is how quickly can you convert this massive AI demand into actual revenue, and what are the capital requirements associated? And so last night, when a lot of different spending metrics came up a little high, whether it was CapEx in the quarter or debt plans for the next year, all of these things came together to make investors a little bit indigested.
In the top line, right, yes, okay, they're going to go to equity and debt markets again. They've told us that. But are they growing? Are they able to actually operate this business effectively?
They're growing massively. The question is whether it's empty calories. It's all about that margin question, because we see as the AI business ramps up, the gross margins come down, and they fired thousands of people this quarter to try to control those costs, but it's still crunching them, right? It's still a question around what is the margin of offering AI infrastructure, and is this a good business to be in? Generally, Oracle has gone up quite a bit in their share price, and investors are hopeful, but it's all about how quickly they can deliver on the big promises.
Bloomberg's Brody Ford, thank you very much. The world's largest private equity firms and deal makers are gathering in Berlin for the annual SuperReturn conference, navigating a tough fundraising environment where AI is reshaping where capital is flowing. Bloomberg's Danny Berger joins us live from the ground for an exclusive interview with Reddit co-founder and 776 founder Alexis Ohanian. Danny.
Ed, thank you so much. That's right. I am here alongside Alexis. Alexis, thank you so much for joining. Wonderful to see you.
Hey, thanks for having me, Danny.
So, look, the big news of the week, it's inescapable, is a SpaceX IPO listing tomorrow. You're obviously very intimately familiar with it, having owned XAI, which got sold to SpaceX. What does it just mean to have this behemoth coming to market tomorrow?
Look, we are all excited. I think right now, most of us in venture and in tech have been waiting for some watershed moment IPO to hopefully get the markets back open. Looks like that is upon us. And just generally speaking, I've been so excited about space tech for about 5, 6, 7 years now. And that to me is, I think, feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact. And I think we're only going to see an acceleration of that.
Okay, but is it all fact? When we start talking about like a $29 trillion TAM and 10 million people on Mars, I mean, you own space companies yourself. Is just like this the way you need to think, or is a little bit of it a fantasy?
These numbers are big. The projections, the ambitions are big. I do think, though, when we think about what we are capable of as a species, space has been something that has mystified us, excited us for a very long time, especially in modern history and modern technology. This was a frontier we really believed for a long time. I know I did growing up. It was only a place for governments to build and innovate. NASA, putting a man on the moon, all that stuff was never something the private sector could do. But what we're seeing now here is undeniable. The private sector's been able to accomplish a lot, and I think it's only going to accelerate. And I do think the overall market is potentially that big. I think when we're talking about human ambition, there is no limit to that. When we talk about the opportunities in space, as low Earth orbit alone just becomes more accessible, we're unlocking pharmaceuticals, we're unlocking biotech that's going to help us here back at home. And that's the stuff that gets me fired up as an investor. That's what gets me fired up as an American. I want to see that innovation come and help us live better lives here on planet Earth.
So is having SpaceX as a public company, is that a good thing for your space investments because it shows there's a pathway for public markets? Or is it a bad thing because so much money is going to get funneled into this IPO that maybe it leaves less room for some of the other space companies?
Well, the good news is where I like to invest is still so early.
Yeah.
Very few of these companies, companies like Stoke or Astroforge are thinking about going public quite yet. They're still thinking about building and shipping and launching. I do think you're going to have undeniably a whole fleet of newly minted millionaires, multimillionaires, as well as investors. So not just the early employees, but also the investors who believe in space tech, who are now going to have capital to put into the sort of next wave. And I think we've seen that play out in tech before, and this will be no exception. And I do think that all continues to accelerate all of us in building the space economy that we're hoping for.
Building a space economy, though, it is something that certainly takes time. And I just wonder if there is room for disappointment. I mean, I don't mean to harp on sort of the crazy numbers of it all, but is there a fear that it gets too overhyped? A SpaceX IPO is just too large, and there's some disappointment, and it sets the project back to humanity, what you're talking about. It sets it back in some time.
I do think it is important to have this tempered expectation. I think on the one hand, folks have to balance, one, what I think is a very important, almost unbridled ambition for human progress, which is, I think, a very important and noble and great quest. And at the same time, the realistic, expectations, everyone should obviously do their diligence, do their own underwriting, all that important stuff before making any kind of stock decision.
Thank you for the legal disclaimer.
Compliance is happy with me. But at the end of the day, I do think what we're talking about here is creating very real value. I know even you think about anecdotally, the difference a person has once they've taken a United flight with Starlink. There's a very, very different feeling about how you interact with technology when you've experienced just a little fraction of what the space economy can do.
Right.
And I do think as we start to unlock pharmaceuticals and biotech that could really only be done in zero G, we're talking about, again, saving lives, improving quality of life, things that I know provide a real economic value, but at the same time help us live that Star Trek future I think a lot of us grew up wanting. So I think be exuberant, be excited, but at the same time, obviously, be thoughtful in how you're underwriting this stuff.
By the way, it's not just obviously SpaceX that's IPOing. We also have OpenAI filing, Anthropic does as well. Yeah. And these are companies that have had a lot of VC backing. In fact, so much so, we were talking about this on stage, 65% of VC money has gone to just 0.05% of companies. Is something broken that those are the statistics we're faced with right now?
It is a unique time. I think clearly, as an early stage investor, I am insulated from this a bit because they're the ones, these multi-stages are often marking up my early investments. And so I think where you start to see the challenge is a lot of these companies in a previous decade would have already been public. And because companies held off going public longer, the private markets became a place that was effectively dealing like a public marketplace. So you're seeing these valuations, you're seeing this increase. I think it is a positive for America and for the world that retail, that regular folks get access to these opportunities. I frankly wish it would happen sooner because I think historically, people draw up, the market cap of Amazon or revenues of Amazon or Google when they went public. And we're in a different world now where privately held companies are able to generate tremendous revenues and market caps before going public. But I think this has been a long time coming, and I do think generally venture should be a place to be contrarian and right. It should be a non-consensus asset, right. And especially on the growth side, it's looking more and more consensus. So look, those companies are about to turn public. We'll see what the next wave of private looks like. I'm certainly trying to do my best to be on the non-consensus and right side early, and I do think venture is healthier as an ecosystem when it's not looking like a couple of very, very concentrated bets.
Well, usually what you say when there's a consensus is that that's a dangerous thing, and it means that there can be a correction. Do you think that that's possible for this industry if everyone is crowding around similar bets?
Look, your instincts are right, and I know you always get in trouble saying why something is different this time.
Yeah.
And with that caveat, I still think something is different this time. And I know, look, I lived through the social media wave. I naively thought the social media revolution that we were building with Reddit was like the revolution. It was not. I naively thought mobile was a revolution. It was not. I mean, it was, but in a much smaller way compared to what this is. We have seen in just a few years technology go from an interesting novelty that could help you write like a press release to technology that could literally write code as well as or better than even some of the most senior experienced developers and really augment the output of folks. So there's a real technology here. It's a real shift. And I don't think it goes away. And I also think it has, as I said on stage, a national security importance.
Right.
Because so much of our lives are digital. Being able, you saw this with the way Anthropic thoughtfully rolled out Mythos, like, you know, we used it first and foremost to shore up vulnerabilities that we had in our businesses here in America. And so even if AI never got any better than where it is today, you know, that is already incredibly valuable. And there's so much wood to chop as we look across so many businesses that right now don't have any software in them. This hotel, I am sure.
Don't tell me this hotel is going to be an AI company, Alexis.
No. But I am sure that whatever systems they're using right now are very bad. And software, as a layer of user experience, user improvement, should be able to level that up in a meaningful way.
And by the way, I do want to just ask quickly, because we have 45 seconds left.
Yeah.
There is this idea that the thing that survives in AI is just like live entertainment. And you have a lot of bets around women's sports.
Very much.
Has this whole revolution, this thing we're experiencing, just made you double down on that?
Yeah, I mean, look, I was a rare voice 5-6 years ago saying this was an institutional grade asset, not just sports, but also specifically women's sports. I love seeing this. I am certain 5-10 years from now, we will still watch, no matter how good the AI generated highlights get, you know, watching the AI version of that Knicks final last night would do nothing for the human soul.
Yep.
Because it even if it was pixel perfect, if it didn't actually happen, it is irrelevant and worthless. So live sports has to be fundamentally human. No one is going to line up to see a bunch of robots, you know, play 18 holes of golf against each other where everyone hits a hole in one. Right, the end state of this technology is some version of this perfection that no one's going to want to watch because sport has to be human. So I've been saying this for 5-6 years now, and I'm only more confident about it. And I think what this technology does is it makes these assets more valuable. It makes them more engaging for fans. It improves training. It improves so many elements, but it does not replace by any means.
We're out of time, but should we just end with Knicks in 5?
Knicks in 5.
Knicks in 5.
That's
I think
right,
that's the look into the camera. Knicks in 5.
Yeah.
Perfect place to end it, Alexis. Thank you so much for joining me. Ed, Caroline, Alexis Ohanian, the founder of 776 and Reddit.
Thank you very much, Danny Berger. I really want to check back in markets, and I don't mean like what's happening in the here and now. We're like up 0.8% on NASDAQ 100. I call it like a modest rebound. Oracle is down on track for its worst day in 6 months because it warned investors it's going to have to tap equity and debt markets. It needs that capital, Caro. Like it's like can't build compute fast enough. But it's interesting, like if you just take a sec, calm it down, most of the names on the NASDAQ 100 are higher. It's the hyperscalers that are lower. The software names are a little bit lower. And there must be an element of like treading water to SpaceX's debut tomorrow.
Definitely. Maybe people are still rearranging as to how much allocation they can have, how much money they've committed. But also, look, there's still hardware on the higher side, in particular in the chip side of the equation. And let's just talk a little bit around that, because questions are clearly around the cost of the AI boom for Oracle there, but also costs for you and me, for the American people. Inflation is spiking. With tech giants scrambling to build out data centers, memory chip prices have skyrocketed, driving a record spike in tech hardware and electricity costs. This is exactly the story that Bloomberg's Enda Curran is helping tell today. You tell it through an individual who's helping small, medium-sized enterprises gain access to upgrading memory. And I mean, he's just thinking this is out of this world.
Yeah, indeed. I mean, this is where the AI boom is spilling over into real living costs. So you mentioned, for example, I spoke to a couple of companies, one of them in Baltimore. He deals with small businesses. He does their IT services. So they come in the door looking for a memory storage upgrade or maybe even a new computer. And he's saying to them, look, because of the AI boom demand for chips, that's driving up the cost for the components he needs, like RAM storage, SSD, etc., driving it up significantly. And as a result, obviously, that means their upgrade job will be much more expensive, to the point where he says he's telling some customers, look, you might as well go and buy a new computer or a new laptop. And the cost of the new computer, new laptop is also going up as a result. So these chips go into everything that we use in every walk of life, and it's flowing through now to the inflation data.
I'm going to just read this, Enda, because I couldn't believe it. It's the AI summary of your story, but the memory squeeze will add 0.4 percentage points to headline inflation before it eases, according to Bloomberg Economics. It is shocking to me that there is a single basis point. We're talking about a category of specific hardware and chips impacting inflation at a super substantive level. Like, I've spoken to you for years. You've been all around the world looking at different economies, different supply chains. Is that shocking to you? What have you learned in the real world economy about that data point?
It's certainly an impact. I mean, the official data that we had yesterday, to your point, showed that the technology and computer components part of the inflation indicators was actually up by just about 15% from a year ago. That's a record increase. So it is having an impact. Now, to be clear, obviously it's not the only issue driving inflation right now. The Iran war, of course, because of the impact on energy is the bigger driver. But it is filtering through in a meaningful way. And economists are saying it's going to be enough to keep inflation simmering at a point where it wouldn't otherwise be. And that's a critical thing. And of course, that's a real worry for policymakers. So the AI inflation story may not be the only factor in terms of what's keeping US inflation elevated, but it is certainly one of the factors, and that's a direct consequence of this AI boom that we're all seeing.
And when we were discussing markets a moment ago, I should also say, like, of course, the war in Iran and the Middle East is like a driver, a catalyst in what's happening in equities, at least today. Bloomberg's Enda Curran in DC, awesome. Really appreciate it. Thank you. So stocks staged, let's say, a cautious rebound with tech stocks somewhat leading the way. Like, as we were talking about, there's a little bit of bifurcation in the bucket of the NASDAQ 100, but concerns about a potential escalation, right, of the conflict in the Middle East are keeping investors a little bit on edge. Oil prices are still a factor. Again, I still think SpaceX has quite a lot to do with this. Let's bring in Kristina Hooper for her read, Chief Market Strategist at the Man Group, $228.7 billion in assets under management. You know, I say this quite often, particularly for the tech sector, like one session a market does not make. But what is the story you see in the numbers on the screen in front of you right now?
Well, I think is a lot of excitement around SpaceX. This is, I think, creating a very significant level of positive sentiment, so much so that markets can really look through all the geopolitical risk and say, hey, this is something exciting. This is something that has incredibly long-term potential. Long-term, it is to me a story about markets that want to focus on the positive, and this is giving them a reason to be positive.
As a market strategist, Kristina, when you're getting bombarded with calls, should I buy into SpaceX? Should I be looking at OpenAI and Anthropic and all the IPOs that might be coming? What is your answer?
My answer is I think we need to think of it in terms of the context of a diversified portfolio. There is certainly potential there, as I talked about. There's growth opportunities. We also have to recognize that valuations are high. And when valuations are high, stocks are vulnerable to a re-rating, especially in an environment in which you have an enormous amount of geopolitical risk. Now, that may impact some stocks more than others, but typically when you have rates going up, that exerts downward pressure on equities, particularly long duration equities like tech names. So if you're looking out far longer term for your earnings, for your payoff, so to speak, then you could very well see some kind of a re-rating.
Kristina, part of the SpaceX IPO equation is slightly mechanical. So some of the index fast-track inclusion, right? And in very simple terms, the passive funds will have to, by their own bylaws, rebalance. Could you explain that a little bit? The basics of it, but when you're a strategist looking across assets, what you think will happen as a result of that?
Well, essentially, you have a built-in demand that is vast. Because if you think about all the different owners of, index-like fund products, you have this captive audience that will be owning it as part of that. And so that certainly changes the dynamics. That's very different than the other IPOs we've seen. And again, as part of why there's so much excitement and there's a view that this stock price could go up quite significantly from here.
Isn't it an irony that Elon Musk has always pushed and railed against passive?
Well, yeah.
But passive is going to be such a driver of demand more broadly for the IPO, but so too is the commitment to the retail investor. Have you done much strategic thought around the impact of retail investor right now on broader markets? Because they're a loyal bunch quite often, but they can also ride in on meme themes and cause more volatility.
Oh, absolutely. I think that's why there are so many firms that essentially monitor Reddit and other sites. I think that was learned from GameStop, that retail investors are quite powerful. Now, I think what we're seeing now is that retail investors are seeing opportunities in technology, particularly AI-related names, and they have put their full force behind it. That's not to say we haven't seen institutional investors as well. And so that has created quite a dynamic, and that is really, I think, largely behind the kind of incredible recovery we've seen over the last couple of months. I mean, the returns are really quite astounding.
I would love to dwell on this, if that's okay, Kristina. So Bloomberg reported that there was $70 billion of retail demand for the SpaceX IPO, though we don't actually know the allocation yet, so it's oversubscribed. But one of the theses that the existing investor base of SpaceX tell me over and over again, retail understands the story better. They're more likely to hold on to the shares for longer, and that will support the valuation over a longer time period. You model for that? Do you share that belief?
So I think it can be a double-edged sword. Yes, retail does understand the story. That's part of why there's so much excitement around it and there's so much retail demand for the IPO. But by the same token, because retail understands the story, if we see cracks form in critical businesses, then you could see retail react to that. Again, we have that sort of built-in demand because of the placement in the index. But having said that, you could still see a lot of volatility. You could see some kind of re-rating in this environment if you see yields continue to go up, and if you see retail investors just become risk averse in general, which could easily happen.
Kristina Hooper, always so measured, always so thoughtful. Thank you for coming on. Man Group, Chief Market Strategist there. Coming up, from snacks to software, GoPuff partners with SpaceX AI for a new shopping experience. We speak with the GoPuff co-CEO and why SpaceX AI, why they're offering, why Grok. This is Bloomberg Tech.
As SpaceX heads towards its IPO tomorrow, investors are betting on more than rockets and chatbots and satellites. The company says enterprise AI represents a $26.5 trillion opportunity. But can Grok actually win corporate customers? One of the few companies putting it to work is GoPuff, which built its new AI shopping assistant on xAI's models. Joining us now is GoPuff CEO Rafael Ilishayev. It's a great case study, right? I think a lot of people read the prospectus and were like, okay, the future of SpaceX AI is enterprise AI, but they have struggled a little to get people to use the models in a meaningful way. You are. Just explain the basics of the relationship and what you've actually done with the technology.
Yeah, Ed, Caroline, thank you so much for having me. So over the last 13 years, GoPuff has built infrastructure to be the fastest and most affordable player in delivery. And our partnership with SpaceX and the product that we co-developed called Go solves the final friction point that we really had, which is the consumer shopping experience. So we thought about this differently than I think a lot of other folks. And it's not just an LLM wrapper that's built within our app, but in fact, it's a co-developed experience where it's a whole new consumer product where you could shop via voice, you could talk to it, have total conversation like you would have with your best friend. Go will build your cart, so if it knows enough about you, it'll actually develop and build the whole cart. And it has this TikTok-style scrolling experience where you can scroll and discover new products that are hyper-personalized and cared for you.
Yeah.
So this is a whole new experience that we co-developed together with SpaceX over the last year.
And Rafael, what's interesting is when you're using data from X, you'll know that I'm all in on the Knicks in 5 game on Saturday, and suddenly I'm being offered chicken wings or I'm being offered chips or whatever it might be because I'm ordering GoPuff on that moment on the Saturday. But from actually embedding within X and within Grok, did you push away other relationships? Did you decide no thanks OpenAI, no thanks Anthropic? Did you look at doing it with competitors?
This kind of relationship that we had and the kind of product that we wanted to build, this wasn't just a plug and play that we could have done with anyone. So we looked for folks that had the right technology, and SpaceX has amongst the best technology, both for voice and imagine, and a partner that was willing to co-develop this whole new consumer shopping experience for us. So, this was a long, 10, 11-month process that we co-developed together with a partner that was willing to work with us, even as early as this morning, talking with our engineers and co-developing this thing together to make it even better. So we were looking for a partner that had the right technology, which SpaceX is, I think, cutting edge and the best, both in voice and in image generation, and a partner that was willing to co-develop this new product together.
Could you talk a little bit about how the economics of it work? Like, how does xAI price things with you? It sounds also a bit like you get good access to the forward deployed engineers, like daily access. All of that is a big factor right now because everyone is counting the cost of tokens.
Yeah. So it's a strategic relationship that we built together with SpaceX AI from day one. And the way that we thought about the scaling is we wanted a provider that can provide, a super high quality product, both across voice and image, and is arguably the lowest cost provider. So we built a relationship that scales.
They are the lowest cost provider? You benchmarked against OpenAI and Anthropic on the cost as well?
Yeah, we looked at a lot of players when we did this, and cost was one of the factors here. But the quality of the product and the willingness to co-develop this together, all of that kind of gave us a lot of confidence to work together with SpaceX. And I think the product kind of speaks for itself. If you play with it, I think it's second to none from a consumer AI experience.
I mean, Rafael, there's interesting reporting out. Over at Wall Street Journal, for example, there's a thought that OpenAI might be doing some drastic price cuts, in particular, basically the cost of its product. People who have been wonderfully token maxing are suddenly realizing how expensive that is, and they want to do that perhaps ahead of competitors like Anthropic. Are you seeing return on such AI investment? Is it really driving growth for the business?
We're a week in to Go launching, and I'll tell you, a lot of the consumer metrics really early on are great. Basket size is up and frequency within the first week is up. But what's even more special is the kind of conversations that our consumers are having with Go. We saw a conversation earlier today with the mom saying, hey, my kid is sick. Can you help me? Or a conversation a few days ago with someone asking, hey, I'm hosting a barbecue for 6 people. Go, can you help me? And that kind of relationship that we're building with the customer is kind of very special. And I think those kind of relationships are the ones that are going to win and lead to ultimately better KPIs across the board.
Rafael, it's great speaking with you. Rafael Ilishayev is the co-founder and co-CEO of GoPuff. I appreciate the take on Grok and AI and SpaceX AI, but there's a lot to talk from governments around the world at the moment about adopting AI. Many countries still haven't delivered on that adoption. That's according to OpenAI's head of countries and the former UK Chancellor of the Exchequer, George Osborne. He sat down with Bloomberg Tech Europe's Tom McKenzie for the Founders Forum in the UK.
I think you are seeing what is true is that many governments haven't yet really delivered on the adoption. They've talked about it, they've got ambitions around it, but they're still in the process of delivering. Now, I know, I've been in government, things take a while, but the governments, I think, that do adopt more quickly will be the big winners. They'll be the winners in their national economy, winners in the quality of their public services, and winners potentially in where their country is going to be over the next century.
Coming up, many things about the SpaceX IPO have been unusual. We're going to talk through the mechanisms of this public market launch next. Ready for liftoff, etc., etc. This is Bloomberg Tech. Breaking news crossing the terminals. SpaceX preparing to sell $75 billion worth of shares, at least a $5 billion order coming from BlackRock. That's according to the Wall Street Journal, citing sources. Bloomberg had reported, that there were several institutions that had placed orders for $10 billion worth of shares. The allocation will get worked out in the next 24 hours through to tomorrow morning, pre-trade. But BlackRock, according to the Journal, at least $5 billion. Maybe it goes up. We'll see.
There are some big orders coming from institutional, but also from retail, Ed, and that is today's big number. More than $70 billion. Retail orders for SpaceX's IPO have actually topped $70 billion, according to sources. And while individual investors are expected to be allocated, well, at least 20% of the available shares, at a $75 billion IPO size, many are going to be left unfilled. That's just one of the rather unusual things about this listing. Joining us to discuss the IPO mechanics, the market impact, the thesis, Brian White, Managing Director and Co-Head of Tech Investment Banking over at Piper Sandler. You're not one of the banks working on the listing, which frees us up to discuss things at length with you, Brian. And I'm so fascinated by some of the technicalities, because you've put in your notes, look, this is a very small float. $75 billion is enormous, a record IPO. But compared to the valuation of the company, very limited amount of how many stock we get access to. Is that an issue?
Well, it is. It's about 4% of the float, and there's overriding demand. You're seeing demand from retail and institutional, as evidenced by the BlackRock order right there. But over time, hopefully they will continue to sell more and more. But right now, it looks like the demand is quite high, and they could probably actually increase the amount that they want to raise. And I'm sure that that's something that the underwriters are thinking about as we speak.
Brian, they did the unusual thing and set out a price pre-roadshow, 135. How do you think the bankers, the potential investors, and everyone else responded to that behind the scenes?
Well, first, what they wanted to do is to back into what they believe is an appropriate valuation. And that's a valuation based on all the facets of the SpaceX business. Number two, SpaceX is unique, and it's led by probably one of the best entrepreneurs of all time in Elon Musk. And there is tremendous demand for it. And instead of the normal mechanism where you're trying to determine how to price based on where you think demand is and what the market values it at, they've determined the price from the outset. What that's doing is putting an artificial floor on where it's going to be, but what it also may allow for is a very, very large pop for retail investors tomorrow. And I think that that's going to be what we want to watch, just how much it pops at the open and where it sustains itself. Because much of retail may see such a large pop that what they decide to do is to sell down throughout the day tomorrow.
But Brian, aren't there limitations as to how much retail is allowed to sell out? Or at least some of the brokers that they buy through will punish them if they sell on the first day?
Well, we've never seen a IPO with this much retail allocation. And so 20% at least is going to retail, and the retail is going to be able to have access to sell. Now, what you may be referring to is some of them may have some issues with future IPOs, but most of the retail that's in this IPO is probably not necessarily planning for much more IPO investments.
You really think they're not going to be in Anthropic or OpenAI if they want to buy into XAI?
Well, they would like to be, but it's unclear if OpenAI and Anthropic will actually follow a similar mechanism. My instinct is they may not, but we shall see, because this is setting a new precedent tomorrow.
Brian, we reported yesterday that pre-float, SpaceX has IG rating from the three main agencies. To you, how much of a signal of that is that they will very quickly go back to the markets and raise more money through any mechanism available?
I mean, I think it's a tremendous signal. I think that they are going, look at the burn that they disclosed in the prospectus, look at the ambitions that they have, particularly with the XAI part of the business, and with their vision about where they want to see their AI business and their space business over time. This is a business that will continue to consume massive amounts of capital, and it will continue to need to access the public markets to raise that capital.
You didn't get a brief on this. We're being transparent about that. But is there a way that Piper Sandler can play this IPO event?
Well, what we're trying to do is just continue to advise our clients about where defense technology is heading, the exciting things that is happening in space, the future of, defense. Those are the areas that we're spending a lot of our time. In terms of the future opportunities around SpaceX, it's something that, our team is very fixated on, but we're not participating in this IPO tomorrow.
Brian White, Co-Head of Technology Investment Banking at Piper Sandler. Thank you very much. Really appreciate it. Okay, this is it, the final sprint, and this is it for this edition of Bloomberg Tech. Are you ready?
I'm feeling ready.
Yeah.
Are you ready? Because you've got a long day ahead of you, Ed Ludlow. There's potentially coverage of these things priced. There's coverage throughout the trading day here on Bloomberg, after the trading day, and of course all things tomorrow.
Like the main takeaway from the guests, it's all premeditated. You kind of know what's going to happen. Still, lots to review on the pod.
There is. Get that podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. I have Ed here for another day in New York City. This is Bloomberg Tech.